All right, welcome everybody to our This Week in Crypto. Today is October 23rd, and we will be going over plenty today, including the massive Bitcoin rise over the past week. We'll also be talking a little bit about Ethereum and many other projects that have been doing some interesting things in the markets right now, both on an on-chain and social perspective. I'm here with Dino, and as usual, I'm starting it off with a bit of a look at our screener. Many of you may expect that we had a mostly green week, and that's pretty reflective here, where we have about 80% of our coins in the green over the past week, including Bitcoin here with a pretty impressive 14% push. This is quite a large gain for a week, not just for Bitcoin, but for any project. You can, of course, see obscure coins like Reserve, Waves, and Hex having particularly good weeks themselves. And then you have a few like Filecoin that had a massive week last week, sort of correcting and losing over half of its market value. You also had another one like ABBC, which was basically in the same position. Great week last week, not so great this week. Hedge, strong. But the big story is that Bitcoin and Ethereum were basically having breakout weeks this week. They had um, a ton of on-chain movement, a big shift in social sentiment, and we'll dive into that a little more here. But just remember, guys, you can use this screener. It's probably one of our more underutilized tools on the platform right now. Just go over to screener here, highlight either my screener or any custom screeners you make. I have all Santiment projects here, which is public to everyone. And what you can do that's really cool is you can go over to the filter. You can highlight all sorts of things like social volume, make only the coins that have moved up a certain or down a certain percentage over any interval of time. And you can find some pretty impressive stuff there. So I highly recommend it. Now, for those of you who have been using our DAA Divergence model, you'll notice that I'm using a number 3 version, and this is one I made for myself. We made an announcement yesterday on Discord that for anyone who wants to be able to view our numbers and had access to the previous DAA Divergence model that is currently not behaving correctly because we simply got an overload of too many people on it, and it crashed something with Google Sheets not being able to keep up. So as a result, what I did was I made a copy myself. All you have to do is go to File, Make a Copy, and you'll see that this will show up, and you'll just want to click OK, and it'll immediately make a new copy for you that you can use on your own account. And assuming you have your Sandbase Pro API, you'll just want to go to Add-ons, Sandsheets here, API key, and then enable it. And in case you don't have it yet, just make sure to go to Get Add-ons, and you can download Sandsheets. It'll come right up, and you should be able to do exactly what I'm doing using an alternate version with identical functionality to the last DAA Divergence model. So here we are looking at essentially the same model. And what we're seeing right now is mostly a little bit of concerning light orange and dark orange, particularly right here, right? If Bitcoin is looking this orange, it almost nullifies what the rest of these are doing a little bit. Every once in a while, you may see a little bit of ranging where Bitcoin can kind of do its thing around this 13K mark for a while. But if I were to be playing the odds here, I would say that a correction is going to be imminent unless daily active addresses pick up. And I'll briefly show you what DAA looks like over the past month. This is on an hourly basis. I also want to show you just a daily basis to make it a little more simple. This is just the last month. You can see that we actually peaked back in late September, just about a month ago, with 1.15 million daily active addresses. And since that time, we've actually had just a slight decline. And our latest big day, after we crossed 13 up to about 13.2 at peak, we were only at 1.05. This is not what you want to see if you're looking for justification of a giant price up move. Usually you'll see kind of a long-term uptrend like we see over the last year here, right? Where it's definitely moving up, but you can see that it peaked in sort of, it looks like late August, and in fact, the biggest was in late September, but most of the big bars here were in late August. And since that time, you can see the gradual decline going on, but despite that, prices moving up. We definitely would consider that a bearish divergence when looking at daily active addresses on its own, which is why going back here, you see these negative numbers, which can be illustrated if you go to the Bitcoin chart. And basically since it looks like October 9th, we've had nothing but bearish signals. So just a little over 2 weeks now of only red after we had that little bunch of green that sort of signified that we could go up here. As soon as it did start to climb above 11K, that's when the big bearish signal started to jump in. So all things considered, if you're looking at what it's done last time we've been in these bright red modes, we got to about 12K here back in mid-August when we had our largest red signal since basically today and the 18th, which have both dwarfed that same signal. And it's dropped down, especially right here in early September. It just dropped down all at once, and once it finally did, it turned green again. So I'm not saying it'll play out exactly the same, but if you believe in this DAA divergence model, which I do, you will probably see a correction more likely than not. It doesn't mean you can't climb a little bit more here, but if it does climb and these DAA signals continue to sort of hover in this range without climbing, that's a concern, and it means that there's likely going to be a pretty big drop off that surprises a lot of people. And speaking of people being surprised and just the overall sentiment of the markets right now, I want to quickly show what the weighted social sentiment looks like. And Dino, feel free to jump in with me while I talk about this, because I think this is a pretty telling graph right now. What we're looking at is,
Actually, Brian, if you want to smooth it a little bit less, you'll see that the actual sentiment spike is even higher than it looks.
Sure.
Because we've smoothed it a bit just so you don't see this much noise when you're looking at these massive periods like 2 years. But really, when it's unsmoothed, you can really see the actual size of this move. Basically, what we're seeing in the past 24 to 36 hours is one of the biggest spike since we've started collecting social data for Bitcoin more than 2 years ago. It's one of the biggest spikes in bullish sentiment towards Bitcoin since the start of our data collection. Now, the current sort of levels are pretty much the same as they have been during the halvening hype. So if you go back to like May, you see these three sort of spikes in bullish sentiment. That's exactly when the sort of halvening hype started and ended. And before that, the last time that we've seen these levels of hype was during the 2019 top. So we have done a complete 180 in terms of social sentiment and the mood of the crowd. So this is data from over 1,000 different crypto specific social media channels. Currently, we're looking at Twitter, specifically crypto Twitter accounts, because our data has been trained on Twitter's data, so it's usually the most reliable, and we use it as a proxy for pretty much all of social media. Although you can use different sources. If you go to sources, there's like Twitter, Telegram, Reddit, all of the channels that we track. In a word, though, it's been very, very bullish for the past 36 hours. Is that good? I would not bet on it. So usually, if you see historical trends, bullish sentiment hasn't really been a friend to Bitcoin. Not just to Bitcoin, but Ethereum and other cryptocurrencies as well. Like if you change from Bitcoin to Ethereum, you will basically see the same thing historically. That bullish sentiment has usually coincided with short-term corrections or even price consolidations. But in any case, it's very hard to push upward and sustain a rally when we see these amounts of sort of hype around the project and FOMO-led sort of discussions. So it's concerning to
Yeah.
keep it brief. It's pretty concerning.
Agreed. Yeah. I mean, we're looking at one just 6 days ago, actually, on October 17th, and we were at near all-time low levels, low as in negative, for Twitter, at about negative 1.05, negative 1.06, below the normal mean, expected mean for the ratio between positive and negative, combined with the volume of sentimental posts coming in on Twitter. So we went from there on the 17th, and it's likely that this was correlated with a high amount of shorts. We don't have a ton of exchange data on actual longs versus shorts, but I did see plenty of posts on Twitter about how BitMEX and some other exchanges just had very, very large quantities of them. And that likely propelled this up move, combined with a few other things, which I'll show. But when you see something go from negative 1.06 to literally 2.59 above the deviation of the mean, that's the highest since May, by the way. That's, as Dino said, about as big of a turnaround as you can get in that short period of time. And as you can see historically, these top levels, these high levels, when everyone is euphoric and everyone's partying and talking about Lambos and moons again, that's when you want to, at the very least, take some profit, right, guys? Because you don't want to follow the crowd and let the people that you're competing with. And I want to reiterate that you're not all on the same team in crypto. This is still a zero-sum game, just like any other market. If people are clinking glasses with you and saying we're all going to get Lambos, that's not how it works. You want to make sure that you're, to an extent, doing something different than the crowd is, because the crowd overall is a losing trader, and I don't say that lightly. If you are following this and you're as euphoric as the crowd is here at 2.6 above the mean, you are going to be in for a bad time in most historic levels. When you look back historically, you don't want to be following that. And you can see here with the triple top here, you can see with this top, this was sort of the eye before the storm, and you would have been lucky and gotten up to 12K if you followed this crowd, but then you would have seen the big drop off, right? Big drop off here, big drop off here, basically. But if you look at the low levels, that's when you want to get in. So I think this is a really valuable tool. And if you have Sandbase Pro, just use this URL here, graphs.santiment.net/social, and you will be able to observe for any platform, any asset that we have. You can smooth it like we just did. You can do any time range, even have interval, interchanges that you can do here. So really cool stuff. I also want to show what the social volume looks like.
Yeah, while you do that, Brian, while you set it up, I'll just reiterate that that spike that you saw in social sentiment in like early June or May before the actual top, like we had a massive spike in social sentiment, which kind of was, so that's what, May 2019 or something like that. So even there, even though we have kind of went above. So that was at around 7.3, I think about 8K. And then we still had a short-term correction. Well, short-term, I mean, there was like a month of consolidation and a price correction before we grew higher. So it's not necessarily that this is going to lead to a long-term, either a correction or a consolidation period. It's just that in the short term, we usually see these types of massive spikes in social sentiment coincide with just a lack of support for a sustained price rally. So yeah, if you go back to social volume and you take like the last year of data and you use the daily interval for social volume, you'll see pretty much the same pattern. Yeah, there you go.
Oops, not 5. There we go, 1 day. So May, we got to go back a little further for May. Let me do 2 years.
Yeah, but in general, like even here you can see, so this is the last year, right? Okay, even better. So similar to May, right? So we have seen these spikes. So this particular chart, let's just explain what they're seeing, they're seeing compared to the other chart. So the chart that we saw a minute ago was actually looking at social sentiment. So all of the messages that we collect from over 1,000 crypto social media channels, they pass through our algorithm, which labels them as either positive or negative or ambivalent. So what you saw a minute ago was the actual mood towards Bitcoin on crypto social media. What you're seeing here is the total amount of mentions of Bitcoin or BTC or any other synonyms relating to Bitcoin over the last 2 years. So once again, we can see that these extreme spikes in social volume either earmark local tops or local bottoms for Bitcoin. But in general, they are sort of a trend reversal marker. So in the past 3 spikes, you can see pretty much coinciding with the end of Bitcoin's respective rallies, right? That one was the Black Thursday spike or the Black Thursday drop, coinciding with the spike in social volume. But then since then, we had the first large spike in social volume for Bitcoin right there at the beginning of May before we started the consolidation period, and then once again at the start of at end of July, start of August, coinciding with once again the midterm stoppage of Bitcoin's rally, and then today and yesterday we are seeing sort of the first pronounced spike in Bitcoin social volume in over 2 months. So once again, we can see the crowd pouring in. The community interest is high. The speculative interest is relatively high as well. Which usually does tend to coincide once again with the short-term price correction. So just keep an eye on these 2 metrics as we move forward. It seems like the crowd is very high on BTC at the moment, at least according to our data. Which, you know, if you're going to counter trade the crowd, now would be a good time to keep an eye on these charts.
Right. And the good thing about these metrics, both the social graphs here as well as the graphs.sentiment.net platform, is you don't see immediate results, right? You can actually have time to react. So, you know, for example, we saw this spike yesterday, but the price still is at 13K. Now, of course, things can shift. We could have a drop followed by a big negative sentiment again, and then it would rise again. But you usually see something like this where it'll range just for a little while and you have time to react. So it's not like you need to be watching these minute by minute, but the sooner you recognize one of these spikes here, the better you can react. Because if we zoom in here, go to like just the last month, you can see the spike happened here, and even though it dropped right away, it was able to recover, and now we're in ranging period. And you saw plenty of other ones, as Dino was speaking, where there was a ranging period after the spike and then an inevitable gradual drop off. So great thing to look at as far as our social metrics overall here, both the social volume and that graphs.sentiment.net. All right, going back to DAA divergence for a minute, I wanted to show you a few other things. You can see notable ones like Fetch is having a big spike. Binance Coin, which I'll get into shortly, they had a big spike. Until today, it looks like it's dropping off quite a bit. Maker's doing quite well. And then I wanted to focus on Ethereum a little bit because it's actually looking positive for the first time in a while. It doesn't mean it's something to get super excited about just yet, and it may or may not load the chart, but if it does, that'll be great. Otherwise, I'll just show you the Sandbase DAA.
So Brian, while you're doing that, we had a question from Coffee. He said that he's new to these analytics, so he's asking, when comparing DAA to the price action, is the logic that the higher the DAA, the more Bitcoin is being sent off exchanges, which means that demand is rising, or how do you generally sort of explain the logic and the behavior between these divergences in Bitcoin's daily active addresses and its price action?
Yeah, that's a good question. So in short, no, it doesn't necessarily mean that movement is being taken off of exchanges. It's simply a way of aggregating the total amount of unique addresses moving or transacting on that given network. So looking at Ethereum, for example, here, this could be just an increase in exchange activity. It could be an increase of offline wallets transacting with each other. But regardless, that's generally what propels markets upward in the first place. It's a rise in overall volume, but this is a more specific way of looking at volume, where it's actually taking the unique amount of addresses. So it's ignoring an address that's transacting thousands of times per day or some sort of wash trading bot, and only counting the total amount of addresses interacting. So the higher that amount is, the higher the implied overall percent of all Ethereum addresses are actually interacting at any given time. And when there are more active addresses, it generally is a foreshadowing event that the market is going to be doing more moving. And if there's more movement overall, that's generally a good thing. If you look at a dead coin or something that hasn't had a lot of address activity, the price usually coincides with that and goes down. So to answer your question, Coffee, it's all about the total amount of addresses interacting, whether it's offline or on an exchange, and seeing that many are interacting is almost always a bullish event. It's rarely just a big uptick in addresses interacting because they're all mutually wanting to get rid of their coins. That has happened before, but overall, as you can see here, Ethereum is a very clear example of it. When address activity is up compared to price, that's when you'll see the price move. And as soon as it starts to drop off, that's when price goes down. I can show you, let me find Ethereum, not that one yet. Let me go to Ethereum really quick, because we saw this basically reflects what we just looked at on that model. This is when we saw a bunch of green on that model because price dropped after Black Thursday, but then we had a huge spike in daily active addresses. So if we went back here, look at that same event. Actually, this starts in April, so excuse me, I just want to only show the last 6 months. Even in April here, we were so far down compared to where price was, but address activity was up. This is up compared to where it was here, even though price is down. So that's why we had a bullish divergence here. And then it kept on climbing until we finally had this huge rise in mid-July, where we went from 235 all the way up to 420, eventually got to about 485 was the top up here. And that happened because the amount of unique addresses interacting was just surging, and Ethereum was likely, almost certainly related to the excess amount of DeFi activity and the enthusiasm around Wi-Fi, MFT, Sushi, projects like that, Comp. They all fueled Ethereum's daily active address upward, but as you can see, there was that huge drop off here, even though the price was rising, and that foreshadowed the big price drop that happened. So
Yeah. So it's
now,
basically just the measure of speculative interest and demand for a particular coin, right?
exactly.
It's very difficult to sustain a price rally without retail and without new money moving in. So if you see a declining network activity and the sort of lower levels of daily active addresses compared to what the price is doing, it's basically pointing or signaling relatively low or waning interest in the coin, both from a crowd and speculative perspective. So even
Right.
if it just means there's people selling, if you see a rise in daily active addresses, it could just mean there's a redistribution event currently going on the network, which isn't bad in and of itself, right? So in general, when you see a rise in daily active addresses, it points to a rise in speculative demand and interest towards a coin, which is usually a necessity for a sustained rally for any particular coin.
Yeah, that's well said. And Dino mentioned new money as well. So while he was speaking, I brought up network growth here. And what network growth measures is the amount of new addresses actually being created. And you'll see that there's often a fairly close but not perfect correlation to daily active addresses. And you can use this as a secondary way to justify whether a price move uh, was legitimate or not. And you can see that the biggest spike occurred back here in late December, and that actually was right at the bottom. So clearly there was an indication that there was going to be a turnaround because there was all this new money suddenly coming in right at the end of last year. And then recently here, you can see that it had its biggest spike in new addresses being created just last week, here on the 16th and 17th. Same with daily active addresses, which I believe this was actually the biggest spike in about 15 months, might have even been a little bit longer. So long story short, if we go back here, that's what these two neon green spikes were. If we go back here, these two large orange spikes, which were basically huge outliers compared to the rest that were around it, that's what these two were. And that may or may not have signaled this price jump. I would say it's more irrelevant because it was based on Bitcoin simply being able to move up. But regardless, we're starting to see kind of a almost even split now of where daily active addresses should be, based on historical price levels. And this is using 4 years worth of data. So it's a pretty good, legitimate sample size that really takes into account, 1,460-ish days of Ethereum over time to give us an accurate idea of where addresses should be compared to any given price level. And of course, we do have an insight that explains how this calculation works. You can look it up, just type in daily active addresses on the search bar on Sandbase. Any other thing I want to show on here? I'm going to just move on for now, but like I said, guys, if you have access to the DAA divergence model, just go to File, make a copy, and what that'll do is put it on your own email address, and you'll be able to pull the data no problem should you have a API of your own. Okay, so I wanted to look at BNB like I promised. Really interesting stuff going on. I don't personally see an amazing bullish divergence for BNB itself, even though we did recently. As it just disappears, it's trying to refresh right now. But we did have a bullish divergence, but I like to look at BNB more so as a foreshadower for Bitcoin and all of crypto. And I say that not lightly because I really have seen a lot of evidence over time that BNB, obviously the token that represents the largest exchange in the world right now, being a trigger for other tokens to be able to move up and down. And when we look at something like token age consumed, this is kind of really small, but I can't really avoid that unless I really zoom in. Let me try this. There we go. So yeah, BNB had its largest token age consumed right back here in late June of 2019. When that happened, let me make it a little bit bigger. I want to actually look at, okay. So
yeah, just Brian, if you want to explain what age consumed is for
yeah,
people
of
that
course.
might not be familiar with the metric.
So age consumed is basically multiplying the amount of tokens moving at any given time and multiplying that by the age of those tokens that were actually moved. So in this case, age consumed here had a huge spike because they were dormant coins that had been sitting in a wallet for a long period of time. A massive amount of them were suddenly moved on the network. We don't know exactly what it was, whether actually we could, if we wanted to, we could investigate whether it was like an online to an offline wallet exchange, etc. But regardless, what this is going to do is it's going to tell us when a large amount of old dormant coins were moved. And in the case of June 2019, one of the largest spikes of any coin occurred, and it signified that the price top of Bitcoin, here highlighted in pink, was about to occur. I think what happened was a lot of people moved their BNB onto an exchange so that they could make a huge Bitcoin sell-off. And that's what actually triggered the beginning of the end of the top last year. And thusly, if you look over time, you can see plenty of other big token age consumed spikes did the same thing. BNB's token age consumed perfectly coincided with the top in February of 2020. And then obviously the big Black Thursday event happened about a month later, but it was already falling, right? And you can see there was another big one right here. These two token age consumed spikes in mid-September, they happened right at the local top for Bitcoin when it got up to 10.5, right? And it fell all the way from 10.5 to 10.2. So this was sort of a minor drop. Oh, I'm sorry, this was actually much bigger. It was actually, that was about 11K to 10.2. So a moderate drop off. And then it mostly has recovered since, as we had our just a minor token age consumed spike here. But I also, if you notice, have address activity highlighted. And what this shows, like we were just speaking about, it's the amount of unique tokens transacting on the network. And I'm going to zoom in here a little just so we can see the lines better. Just go to the last 3 months. And you see that these brown lines absolutely exploded last week, right? Right at about the 17th. And if we look at the timing of it, I'm actually going to get rid of BNB's price because I don't think it's relevant right now. If we look at the timing of when these brown spikes started, it was right at about 11.3 for Bitcoin. But as soon as that happened, you can see a huge, huge surge happen all the way to 13.2 where it peaked off. And when it peaked off, we actually got an even larger spike in address activity. And when that happened, it actually dropped down. So it's very likely that this address activity movement triggered the up move in some respect, and then another address activity spike happened when those same people moving all of those addresses decided they wanted to take profit. And I believe that there is quite a bit of correlation here for the same event that happened back in mid 2019, where you saw a lot of BNB being moved onto an exchange, or at least moved from address to address with the intention of moving the markets in some respect. Could have been CZ himself or the staff of Binance. I don't want to speculate that, but I do want to point out that there's a very heavy correlation here, and I would really try to take a look at address activity and token H consumed for Binance Coin as an indicator for big triggers in the markets happening. Considering the timing of these, it's very unlikely that there wasn't at least some correlation going on. So I'll probably do some more research on this over the next couple of weeks, but I really want to reiterate how cool Binance Coin's metrics can be in terms of foreshadowing events for the overall markets. Okay, last thing I'm going to show really quick is top non-exchange address movement. I just wanted to highlight 4 coins that are having more and more assets being moved from online exchanges to offline wallets here. I have highlighted Link Ren, what's BUSD? Why do I have BUSD highlighted there? Well, ignore the yellow line. I'm not sure why that. Oh yeah, that's just it's Binance Coin. It's just showing up as BUSD. Yeah, these 4 are Ethereum, Link, Ren, and BNB. That is, are all having big up moves over the last 3 months, showing that basically the top 10 whales are moving more and more of their funds to offline wallets. And when they're doing that, it's usually a sign that the people with the most at stake for those respective assets are feeling confident about the long-term or at least mid-term price movement upcoming for them. So I like to look at this as justification that the markets are looking healthy, and clearly they predicted right, because obviously the markets have been booming over the last week or two. And these are just 4 that I think particularly are showing very good signs that there might be continued longevity, assuming Bitcoin can hold up the markets okay. That's the big if right now, because you saw the bearish divergence. But I really recommend looking at top non-exchange addresses for any ERC20 coin, and you'll be able to see exactly what the top 10, or you could even make it top 100, top 1, anything between 1 and 100, really. You can look at what those respective whales are doing at any given time, and non-exchange addresses moving up is a great indicator of whale confidence. So Link, Ren, Binance Coin, Ethereum, all doing big up moves right now. That being said, I'm going to end my segment for now. I want to make sure Dino has plenty of time here, and we can answer questions together at the end.
Awesome. Thanks, Brian. All right, so we have a few questions already in terms of the coins that people would like us to take a look at. I think I've seen Litecoin, XRP, and MATIC. So before that, I want to circle back a little bit about Bitcoin, because there's a major move that we haven't yet discussed. So I'm going to share my screen and I'm going to show it to everyone. All right, first of all, can you see my screen?
Looks good, yeah.
Okay, so first of all, this is an insight that we are going to be publishing in about 2 hours. It's a weekly edition of our Santiment Pro report. Everybody that has a Sandbase Pro account gets access to these. It's a very, very detailed analysis of what we have seen with Bitcoin in terms of both its on-chain data, its social data, whale activity, holder behavior. From all angles that our platform allows, we have kind of shown what is currently being, what is currently being done with Bitcoin and what its on-chain data is sort of suggesting about its midterm potential. So one thing that I wanted to show is the behavior of Bitcoin's long-term holders. So Brian mentioned a minute ago age consumed as an indicator, right? Where we think in general that age consumed and several other metrics that we have that track the movement of previously dormant coins, we think these metrics are incredibly powerful because when they spike or when they point to a renewed activity of previously dormant holders, it may point to a significant shift in the market conditions and upcoming price volatility, because people that have been into Bitcoin for years on end and have been fairly consistent with holding to their bags, once they start making their moves, it usually points to major shifts in the behavior of long-term holders, and in general these types of moves tend to reflect on the market very heavily. So I wrote about this. First of all, I'm going to show what I wrote yesterday and how this has changed in just 24 hours. So if you go to insights.santiment.net, you will see this sort of mini insight that I wrote yesterday, showing how Bitcoin hodlers or long-term investors were on the move. And one of the metrics that I showed here was Bitcoin's age consumed, which started to spike here. It had several strings of 12-hour spikes in a row, which basically means that a significant amount of Bitcoin that have previously been inactive on the network, essentially they have not moved for a sustained, prolonged amount of time, are starting to move again. So when we see these sort of strings of spikes, usually like here and here, we tend to, coincide. We tend to see periods of upcoming price volatility for the coin, right? So this is what Bitcoin's age consumed looks like today. One sec, let me take these off just so you can see it. Boom. All right, so this was yesterday. Kind of okay, moving a little bit upward, but it still has ways to go. This is what it looks like today, completely overshadowing everything that we've seen, I think, so far this year. Even, well, okay, since February 2020. Even it's an even bigger spike in age consume than what we've seen during Black Thursday. So what this basically indicates is that we are now seeing a massive spike in the amount of Bitcoin that were previously inactive, basically holders or addresses that have stayed inactive and dormant for a prolonged amount of time are now starting to move BTC. When this happens, it usually points to periods of incoming price volatility. Let me show you a few examples. If I zoom out of this massive spike, it happened here during the Black Thursday event, and then it happened at the first sort of rally for Bitcoin after the Black Thursday dump. It earmarked several local tops like here, 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 and here. Also here as the top local top was forming. It also sometimes points to local bottoms for Bitcoin as well, like it does here, like it does, I think there was another one here. So it's not necessarily a top or a bottom indicator. Age consumed in general is a marker of upcoming price volatility. So when you see this type of spike, just keep an eye on it, right? It seems like there's a lot of moves being made by long-term Bitcoin holders. So I would assume that we're not going to stay at these levels for long. Something might happen, not necessarily going to say which direction we might take moving forward, but unlikely that we are just going to keep chilling in this sort of 13K range. So one additional metric that I want to show that illustrates this even better is the activity of coins of Bitcoin that were previously dormant or that have not moved for at least 365 days. So for at least a year. Now look at this. All right. It's such a massive move. So, okay, let me zoom out of it.
Actually, Dino, this is what I wanted to ask you. How dormant, how far back can we see dormancy?
We can see it as far back as 9 years.
Yeah, sorry. I mean, can we identify it as in 60 days, 90 days, 180 days, or
Oh, you mean
365? Yeah,
exactly
how,
where this is coming from?
well, more or less in a range, because we
Yeah.
like
Yeah.
put it in a bucket.
So what we can do is we can look at. So there's also a big spike in the amount of Bitcoin moving that have not moved in the past 180 days. Actually, that's easier to see here in our sandbox. So just for brief purposes, let's look at it here. One sec. Where is there? It is. So dormant coin circulation. Okay, so this latest uptick, right? This is the last 2 years. So notable spike in 180-day dormant circulation. A notable spike in 365-day. Okay, so if we zoom out of this, there we go. 2 year, not so much. 3 year, not so much. 5 years, relatively high. 7 years, not so much. 8 years, well, this was prior, so not so much. 9 year, not so much. 10 year, not so much. This is all several days before the rally, by the way. Yeah, you can see it here. So it seems like this is it's mostly these two. So 180 days and 365 days, people are starting to move their coins. So something to keep in mind. One additional sort of way that we visualize the behavior or activity of previously inactive coins is with mean dollar invested age and mean coin age. Which points to periods. So the rise in these metrics point to periods of network-wide accumulation, and then these drop-offs here point to periods of redistribution, people selling their coins, Bitcoins exchanging hands at a higher pace. So what we can see here, and let me change the color so you can see it a bit better. All right, so we've seen these periods of redistribution as mean dollar invested age starts to dip. We've seen it during the February top. We've seen it here first as the Bitcoin started consolidating in May. We've seen it very strongly during the consolidation period between July and August. And then in the last 36 hours, we are seeing once again a strong move downwards in Bitcoin's mean dollar invested age, which basically you can read all about how this metric is calculated. I don't want to get into it because it will take a bit of time. But in general, what the downward move means is a potential period of redistribution, which does tend to often coincide with upcoming price volatility, consolidation, sometimes even price correction. So something definitely to keep an eye on moving forward. So we are going to, like I said, we're going to be publishing a very detailed analysis of everything that we've seen in terms of Bitcoin's on-chain activity and social activity, not just the behavior of hodlers or long-term investors, but also behavior of whales, behavior of general network participants, and other stakeholders. So if you want to read the full report, make sure that you have a pro account set up. If you don't have it already, you can sign up for app.santiment.net for free for 2 weeks, get a free trial, see everything on there is on our platform to make sure that it is as powerful as we think it is. And then from there on, it's just $45 a month. So, okay, I'm going to stop it there as far as Bitcoin is concerned, because we have a few suggestions or requests as far as what people want us to see. So let's start with Litecoin. Actually, Brian, should I move it over to you? Because I know that you had a few things that you wanted to maybe discuss with Litecoin, or am I mistaken?
I could certainly show Litecoin as far as DAA Divergence goes. Maybe we could do it together. Why don't you keep it on your screen,
Okay.
and you can just open up Litecoin's DAA, and we can talk a little together.
All right, so. So let's see, Litecoin. Yeah, let's start with daily active addresses and just kind of gauge the amount of activity on the network.
Yeah, in short, it's been bullish for quite a while.
Okay.
Maybe even zoom out to 2 years as a start.
So let's get out of the 2018 hype. All right.
Yeah, so basically at the end of 2019, the last 3-4 months of 2019, it was looking really, really low. And it actually tried to rebound in February when a lot of altcoins were pushing up. And then DAA basically bottomed out right after Black Thursday. And since that time, you can see that in June, I believe it was, that huge spike.
Yep.
Yeah, early June, that's when things really started to explode, but price didn't seem to react much to it. But it did create a pretty massive bullish divergence. And even though it dropped back down after that, it rebounded nicely after it finally did move up. And you can see ever since about, is that early August when it started to have a larger uptick there, Dino?
Mm-hmm. Here? Or
no, back where it first started jumping up. No, I'm sorry. In about, it looks like around August 8th or so
let's
of
see.
2020, just about
All right,
two
all
and a
right,
half
sorry.
months ago. Yeah, so all of those higher orange spikes after it was consistently lower, it's basically returned to the same level that it was in uh, all the way back in 2018 there. And you can see in 2018, the price was still a little bit higher than where it is now.
Mm-hmm.
Therefore, we've basically been seeing a nice bullish divergence for about 2.5 months ever since early August. And even though the price dropped, you can see that the DAA really maintained itself nicely in early September. So yeah, you can see the big jump in late July, early August, and even after the drop in early September, DAA has pretty much maintained itself. And I like the way it looks. Now, obviously, Litecoin, a lot of people sort of view it as a meme. They talk about it as kind of just a test net for Bitcoin. And that's somewhat true, but it doesn't mean that Litecoin can't be a good asset to invest in individually. And I see that obviously we saw that when Bitcoin made its jump, Litecoin had kind of a echo effect, and it ended up doing what Bitcoin did on a smaller scale right afterwards.
Mm-hmm.
And you'll see Litecoin will often do what I was showing with Binance Coin with its actual price, which is it will make an up move right before Bitcoin does. And that hasn't really happened recently, but historically, if we go back years and years, you don't need to show it now, Dino, but going back the last couple of years, when Litecoin makes like a 5 to 15% surge all of a sudden that's independent from the rest of the markets, we'll almost always see Bitcoin do some version of a follow. In this case, it was kind of a reverse where Litecoin followed Bitcoin, but you can see that there's an overall bullish divergence that can be really good as an indication for the rest of the markets if that comes to fruition. So if Litecoin starts to make an independent move, that means that Bitcoin may just in fact start climbing up to that 14, 15, or 16K level. But that's a big if. And we would want to see maybe a little more of a climb than we've already been seeing for Litecoin.
Yeah, I'm
So
just
that's it
looking
for
at
DAA.
other metrics. Yeah, thanks, Brian. I'm just looking at other metrics while you're talking, just to kind of speed it up in terms of the analysis. So, dormant circulation, basically the same thing that we shown for Bitcoin just a minute ago. The amount of Litecoin that have remained dormant for at least a year. You can definitely see how these spikes tend to coincide with very interesting periods in Litecoin's price action, right? Right at the start of the rally, near the end of it, or near the top. Earmarking bottoms, and then here earmarking the top. So at the moment, we're not really seeing any sort of response, a strong response from Litecoin's long-term holders. Let's check in the age consumed as well. Yeah, not really a whole lot, maybe a small spike in terms of the response from Litecoin's long-term holders to this rally, which is relatively positive, right? The fact that compared this to Bitcoin, where we saw that massive I turned it off, that massive spike in age consumed. Currently, Litecoin's long-term holders seem to be sitting on their backs. So for the time being, I mean, it's going to come down to what Bitcoin does, I think, either way. But if we were looking at it from in a vacuum, Litecoin's long-term holders seem to be sitting on their backs for the time being. Let's see if we can see that on mean dollar invested age as well. Yes, indeed. So see these sort of redistribution events during the peaks here, and here during the top. For now, we have an upward slope, which is pointing to a period of accumulation. So this is the last period of accumulation, of uninterrupted accumulation, has been the last 10 days. Not a whole lot, but there's still something to go by, right? I did see, however, a notable uptick in social volume for Litecoin, which if we were looking at historical trends, not necessarily a great sign. So here we saw a rise in social volume in line with the price rise, similar to what we've seen here during the 2020 high. on August 17th. And then we've seen an uptick here, obviously, during the last 2 days. So when we see these types of spikes, usually if they prove to be short-lived, like they did here and here, if the price tries to grow upward, it is doing so in a sort of declining crowd interest, which usually tends to be short-lived. So keep an eye on this spike in social volume. If we see it as we are already seeing it coming down a little bit, we might be in a period or sort of in a mood for a short-term correction. One last thing I want to show for Litecoin is MVRV. So we haven't really talked much about MVRV today, even though it's one of the coolest metrics that I think we have. Basically, what MVRV shows is the average profit or loss of a particular group of Litecoin holders. So for example, right now we're looking at the 30-day MVRV, which means that at the moment we're looking at the average profit or loss of all addresses that have acquired Litecoin in the past 30 days. So let me change the color so you can see it a bit nicer. This is fine, I guess. All right. So as a rule of thumb, right, the higher the MVRV, the more likely it is that these holders are going to start selling their bags because their profits are getting higher, and so there's more sell incentive, which eventually transforms into sell side pressure. On the other hand, the lower the MVRV, especially when we go into negative here, like for example, so 0% means that the holders are breaking even, and then as we go higher, like for example here we see 17%. That means that on average, Litecoin's 30-day holders were up by about 17% compared to their initial investment. And then here, as we go lower, like for example, minus 41% here during the Black Thursday dump, that means that on average, Litecoin's short-term holders were about minus 41% of their initial investment. So the lower that we go, the more opportune time it is to accumulate because there's just not a lot of sell side pressure. Nobody is going to be selling at these sort of levels. They've probably already sold and are going to wait for a bounce back. And the higher we go, the more likely it is that we are going to see Litecoins, in this case, short-term holders, start to offload their bags. So what we want to see is we want to see historical trends for Litecoin and general sort of danger zones in terms of its MVRV. So at the moment, I can definitely say that anything between like 13% to 25% generally tends to be entering a danger zone for Litecoin, where we see a short-term correction and some sort of a profit taking by short-term holders. Currently, we are at about 6.8%. So it's not necessarily, I think, in general, Litecoin short-term holders aren't super incentivized to sell just yet. Obviously, they are going to be looking at the entire market trend and not just Litecoin. But if we were looking at it in a vacuum, we do have room to grow in terms of Litecoin's short-term holders before they start dumping. If we look at something like more long-term in terms of Litecoin's long-term holders, so MVRV, 365-day MVRV looks at the average profit or loss of all holders or addresses that have acquired Litecoin in the past 365 days. We are currently at about 8% profit. So on average, all addresses that have acquired Litecoin in the past 365 days are currently 8.3% in profit. So what we can see here is, especially if let's look at the last year. So this is obviously a bull cycle high, which tends to kind of overshadow most of these MVRV local tops. But if we look at the last year alone, we can see that we're slowly approaching the general sort of levels where long-term Litecoin holders start to think about taking some profit. So this is 7.5%. This is 16% and 22. So between, I would say, 7 and 20% is usually the zone where we don't really stay in that zone for very long before a short-term correction happens. So the fact that we are currently kind of moving slowly into that zone above 10%, like we saw here, is relatively concerning. So yeah, there's a lot of stuff that we can go over for Litecoin and all of the other coins that we have on-chain data for, but just for sake of being brief, let's move into XRP, because I saw one of the users in chat mentioned that XRP had shown some signs of whale accumulation. So I wanted to check into exactly what our holder distribution metrics are showing for XRP. So what you're seeing here is the combined balance of all addresses holding a particular amount of XRP. So I was interested in these sort of mega holders of XRP. Let's look at the last 6 months. There we go. So there's several interesting patterns to see here, right? So we're looking at the combined balance of all addresses that are holding between 1 million and 10 million XRP. So relatively high or large XRP investors. So one thing that you can kind of see here happening back in June is this massive spike in the amount of XRP being held by these whales during the local bottom before an uptick, right? So basically a pre-pump positioning, buying at the bottom, allowing for the price to rise and to rally. We have seen sort of a drop-off in their respective holders or holdings since the drop-off here. And then another sort of buyback event here during the local bottom, another sort of buyback event here during the local bottom as well. So currently we do see sort of a slight move upward. So this is a percent of total supply. We can also see what that means in actual numbers. One sec. So from 3.35 billion XRP all the way up to, what are we now? Let's see, 3.37. Let me zoom in. Oh, okay. Last month, please. Thank you. So 3.35 to 3.41 billion XRP. So there has been a relatively strong sort of uptick. So what is this, about 200 million XRP being moved or accumulated by these addresses? So something to keep in mind. The question was also whether this sort of accumulation by whales leads to an increased risk of a dump. Eventually, it definitely does. What you want to really do is you want to kind of get in early, right? Basically, try to capture these types of events where the holders or investors, large whales, are slowly coming in. So they're basically just entering into their position before starting to dump on the market, which is what happens here. At the moment, yes, there is a little bit of a spike in terms of the holdings of large XRP addresses, but not all that much, honestly. Like still wouldn't consider this to be a massive detachment from the trend. I would wait to see something like this before I'm really feeling confident. So this is the combined balance of addresses holding between 1 million and 10 million, and this is the total number of addresses holding between 1 million to 10 million. So here we went from 1,291 addresses holding this amount of XRP to 1,342. So about 50 new addresses, millionaires, XRP millionaires, right here at the bottom. And so we have also seen an uptick in the past 10 days or so, but it's not that big, like 1,331 to 1348. So about 15 new whales for XRP in the past 10 days. Not negligible, but at the same time, like I said, I would probably be looking at a longer or stronger move before making any decisions. Now, as far as other factors for XRP, let's look at some additional data points that we have for it. So let's start with daily active addresses. There has been a big spike here, which kind of makes everything look less strong in comparison. So definitely something that we see quite often is these types of spikes in daily active addresses during the price rally. And then as the daily active addresses start to dissipate, it's difficult for the price to sustain its rise and starts to fall down as well. For the last couple of days, we have seen a slight uptick in the amount of addresses sending or receiving XRP, which is, it's good. We do definitely want to see this be sort of a stronger or a more sustainable rally like we've seen here, which kind of coincides with the price action. We don't want to see this being a one-off, but for the time being, at least, we are seeing a spike from 5,700 addresses to 7,300 addresses, so about 1,600 new addresses in like 4 or 5 days. Not bad for XRP, right? Definitely too early to call it one way or another, but keep an eye on this chart and let's see what happens in the next couple of days. As far as what XRP's long-term sort of holders are doing. So this spike kind of overshadows these ones, but you can definitely see, like if I zoom out here, right? Yeah, you can see these spikes in age consumed around the local tops here. Here as the correction starts, and then here also before before the drop off. Once again, pointing to the fact that when long-term holders are starting to move their coins on the blockchain, they rarely do so without doing extensive market analysis, sometimes even with some insider knowledge. So making sure to keep an eye on these sort of moves can be very profitable sometimes, but in general, always kind of points to interesting times in a coin's life cycle here during the local bottom as well. So for the past pretty much 30 days, right? Ever since the start of the month, we haven't really seen anything in terms of Litecoin's long-term holders starting to move their bags on the blockchain. They seem to, even with this latest sort of spike in Litecoin, in sorry, XRP's, in XRP's price, we haven't really seen them react to it. They have been sitting on their bags. I mean, I can kind of see why it's really not that strong of a move upward just yet. Let's see the 365-day dormant circulation as well, just so we can confirm this. Yep, nothing really in the past month. Generally, a good sign if you want to see the price rise, right? Is the sort of implied confidence in among Ripple's investors that the price is going to rise, and therefore we are going to sit on our backs for a prolonged amount of time before starting to sell. So overall, I would say, so let's look at the its social volume as well, just to make sure that there's no, yeah, there hasn't really been any sort of notable spikes 1 day interval, obviously. So this is what you don't want to see. You don't want to see these types of massive social volume spikes coinciding with local corrections. Once again we spike, once again we go down. Currently we seem to be in sort of a normal plateauing amount of the social volume for Ripple. Relatively good, good for, at least it provides support for the room for the price to grow before we see another uptick in social activity. Overall, I mean, look, XRP's metrics are looking okay at the moment. I don't see any sort of glaring buy signals, but I'm not seeing any sort of glaring major sort of dump events either. It is, I think, at the end of the day, we are going to probably be massively influenced by whatever Bitcoin does next, and it seems like it might be preparing for a big move. But in a vacuum, XRP's metrics are not looking all that bad. Let's look at MVRV just quickly. Let's make it a prettier color or a brighter color. Okay, this will work. So the sort of the current line is 5% in profit for short-term XRP holders, which is not necessarily a danger zone just yet. I think going or entering anywhere between 10 to 20% here is usually where you want to start being careful. So it's these levels, and these levels here between 10 and 20%. So we are kind of inching towards that, but we're not there yet. Let's look at what the long-term holders, their profit margins are at the moment. It's about 8%. So once again, if we look at historical trends for the past year, usually it at least doubles before we see a top, like 16% here, 29%, 33%. So at the moment, I mean, once again, I'm not seeing like pronounced top markers for XRP. I think there's enough like fundamental support for the price to grow. At the same time, however, I think it's just going to come down to what Bitcoin does next. It's them's just the breaks. Yeah, okay. We have maybe room for one more. I think I saw MATIC being discussed in the chat. Yeah, Brian, do you want to take over and check out some of MATIC's on-chain activity?
Yeah, give me just one moment. I switched my resolution on my monitor.
Okay. So while Brian is doing that, I would strongly urge everyone checking this out and watching this either live or after the fact to please like this video, subscribe to our channel, and you would be my favorite person if you also wrote a comment underneath it. Whether it's a positive or negative feedback, we really appreciate it, and YouTube appreciates it, because in order for our channel to grow and in order for us to make more of these and even maybe make some shorter videos for you on a weekly basis, we need to convince YouTube that our content is worth sharing around. And anything that you do to help propel our channel forward, like liking, sharing, subscribing, it really does help a lot. So thank you in advance. And Brian, I'll hand it over to you because I see you've already shared your screen.
Yep. All right. I'm going to kick things off just with a brief price and volume analysis. As we can see here, over the last 3 days, we actually got a pretty significant uptick in trading volume, 3-4 days. And it's actually the biggest spike we've had in just about a month. So this is significant, and it's interesting to see that it came at a price rise. For the TA traders out there, you're well familiar that when volume gains happened as a price gain happens, it generally is a sign that it can have some sustainability. Obviously, it did drop off shortly before the price top did, but we should always keep in mind the contrast to Bitcoin. So I'm going to actually overlay Bitcoin here. And obviously, Bitcoin just took off, but you can see that the top of Bitcoin happened pretty much simultaneously with MATIC and most of the rest of the altcoins as well. So this isn't too much of a concern right now that we had the volume drop off, and it's still quite high compared to previous levels that we saw in the early part of October. Looking at social volume here, get rid of regular volume. I'll get rid of price of Bitcoin as well. Social volume is quite low. We actually have been declining for quite a while since MATIC had its big run in mid-August, where it got up to about 31 cents or so, or 0.031 cents, I should say, followed by a pretty big drop off. And as the price drop off has happened, so has social volume. And this is actually a good sign. Generally, when an asset is not being discussed much, that is when it has its biggest opportunities to buy. You want to go into an asset when the rest of the crowd is not talking about it, and vice versa. When the crowd is talking about it a lot, like it did over here, that's when you want to get out, just like it did right here with its biggest spike here in late August. Price just dropped off right afterwards. So social volume, it's looking good. If we were to look at address activity now, we'll just look at daily active addresses over the last 3 months. It's been kind of a mishmash here. Let's zoom in a little, full screen it. I actually like how address activity looks overall. Ignore today because this is the one that's in progress. But if you go to the previous 3 days, very good. We've had bunches of good address activity after we had a pretty not so great run in September following the big altcoin crash. And this is what a lot of altcoins look like, a complete sort of ignoring of it in respect to Bitcoin, because a lot of people were very fearful here of the markets. But as it started, exactly about 2 days before it had its big up move back to about 22 cents, that's when DAA started to go over 600. And it's had pretty consistent days since then. Obviously, a few drop-offs, but I like the way it looks. And we can compare it a little bit to even just the last year. And we can see that overall, the trend has been up. It's definitely a good-looking DAA chart, and I like the way it looks. I might even add this to my DAA versus price divergence model so we can sort of see how it looks over time historically. But I actually think that overall, especially on this big downtrend where DAA has sustained itself pretty well, this looks like a bullish divergence to me. And this is an important one because it's really is going to be foreshadowing of the price over the next month or so. If this DAA can stay up, I would be pretty confident that we'll see a bit of a rebound, as long as the big asterisk is if Bitcoin can sustain itself at roughly these levels, or at least sort of be in range of it. So yeah, overall, I think MATIC looks good here from a DAA and a social perspective, so-so on the volume perspective. So yeah, that's a good asset that that user pointed out for us to highlight a bit, because I think it looks like a better than average opportunity on the altcoin landscape right now. Just keep in mind that all altcoins are going to be at the mercy of what looks to be a slightly overinflated Bitcoin right now.
Yeah.
So
Yeah.
take all that with a grain of salt.
Yeah. Let me jump in real quickly before we end, just to show MATIC's exchange activity. Like we haven't even really touched on exchange inflow and general exchange metrics at all today. It's just sometimes you don't have time to show everything that you have on the platform. This is what usually happens during MATICs and most coins, local tops. You see these spikes in daily active deposits. Active deposits are addresses that are used to funnel MATIC to exchanges. So when you see a spike in deposits, it means you're seeing a spike in addresses that are moving MATIC to exchanges, presumably to sell. Obviously, this sort of rising sell pressure tends to coincide with local corrections and local price tops like it has in May, as well as August. Since then, we have seen one big spike here, or relatively big spike, coinciding with a local top. So like if we zoomed out here, you would see that this was actually a relatively strong move downwards. But overall, it seems to, for now, be staying at these sort of normal levels of activity. So it seems like we are, if we assume this sort of sell side pressure has already been exhausted, it seems like we are moving into a declining, or we are in a declining sort of sell side pressure area for MATIC, which is good. It's something that you want to see for the coin that you're interested in investing, is less sort of, or not a whole lot of people looking to sell at the moment. Yeah, so in general, let's finally look at MVRV for MATIC. Last 6 months. I mean, you know, when Bitcoin's dominance is growing like it is at the moment, it's always kind of just sketchy to be looking at these metrics and, you know, think that they're going to mean anything. Hopefully they will, but you know, as Bitcoin's dominance grows, it's going to have a larger gravitational pull on all of the smaller altcoins as well. Let me try and refresh. Okay, 30-day. Okay, there we go. Let's take last year of data. Currently, we're about minus 0.5% for 30-day holders, and we are at, oh, very negative for long-term holders. So not a whole lot really reason for MATIC's holders to start selling at the moment. Let's zoom in a bit just so we can see it. Right? Yeah, we're at about break even for short-term holders and minus 13% for long-term holders. So we can basically see that you know, when the tops come, they're usually in strong profit. 30% for short-term holders and 50% for long-term holders here. 22% for short-term holders and 45% for long-term holders. So these are the levels at which usually you're, you know, supposed to think about liquidating your position for the time being. At the moment, though, I mean, yeah, fairly low. I think just looking at it from a perspective of, is there a lot of incentive for holders to sell? Not really. They're not really making a whole lot of profit. In fact, both long-term and short-term MATIC holders are underwater at the moment. So other fundamentals showing, if they're showing relatively strong, you know, bullish divergences, or just fundamentally sound activity, the MVRV would allow for the price to grow. So we'll see. Keep an eye on it in days to come, and mostly just look at Bitcoin and what it's going to do. Okay, guys, I think that's going to do it for today's stream. Thank you very much for everybody joining us. Once again, please do like and subscribe at the very least to our channel, because it helps a lot and it helps us convince YouTube that our content is worth spreading around. If you enjoyed what you saw today, and you don't already have an account on Sandbase, go to app.santiment.net and create a free account. It lasts for a 2 week, where you for 2 weeks, where you can check out everything on our platform for free. including all real-time metrics, access to our Pro Insights that we write on a daily basis, access to our weekly Pro Insights, and a number of other features. So if you think that after 2 weeks, if you're convinced that this is as powerful as we think it is, it's only $45 for a monthly plan if you're on a yearly billing cycle, and $49 if you're on a monthly billing cycle. So I think that's going to do it for us today, right, Brian?
Yeah, Dino, and to add on to what you're saying, I just want to remind everyone we have discount codes. So while you are on trial, make sure to ping us on our Discord. You'll see the link on this YouTube description. Join us there, ping one of our staff members, or just ask us in the general channel for a discount code. We'll be happy to give you one. Also request for access to any of our Sandsheets models if you have an API key, or if you just want to check it out while you're on your trial, you should be able to see everything. So keep that in mind, and remember that we are back here every Friday at 7 a.m. Pacific, or for you Europeans, 6 p.m. CEST. And yeah, we will see you all next week, and look forward to any questions we have between now and then.
Yeah, I already see some questions about Uni and Wi-Fi. You will want to check out the next week's stream, because it's going to be a lot about DeFi and whether we are going to see the next DeFi wave. We have some very cool stuff in the works to try and figure out, from perspectives that not a lot of people have looked from in terms of what's going on with DeFi. We have something very exciting coming, so be sure to tune in next week for more information on that. Anyway, thank you all, guys, and we'll see you all in 7 days.
Thanks all.